So it's a new year and a fresh perspective. And Darren Farwell is with us this morning. Darren, I have a question for you, actually a statement more so. I've had several people ask me if all financial planners are equal. And in my opinion, no. I've learned that from you that the same money can earn more when it's invested with a strategy that's devised by an experienced advisor such as yourself. Every week, you make my jaw drop. Maybe not every week, but almost every week. And I'm a believer and advocate that two opinions are worth more than one, and that it's good to shake your reality. So it's the beginning of a year, and I'd like to have your insights about how we can make our money work for us tax efficiently and live life on our own terms. So I'm excited to start the year, and I'm not sure where you're going to go with this today, but I did want to address that one comment because I get it a lot. Is it important to have a second opinion?
Well, of course, a second opinion it does one of two things. You learn something that you didn't know that could help make your money work better for you, perhaps save on taxes, or just put in place a plan that makes more probable that the end result you're looking for will happen. Often, though, you find things that perhaps could be arranged or organized differently, and that will help with your overall planning. And then finally, really it's important to fundamentally just have a plan. And whether you're working with one person or two people, and some people do have two people looking after their affairs, because there are times when one person just doesn't have the whole picture because there's a lot to know. So important always to have a second opinion every once in a while, as you said, Marilyn, just to shake things up.
Well, thank you for addressing that. And it is the beginning of 2017, and what do you have for us today?
Well, my happy story today is really the outlook for 2017. Before I want to get to that, though, I have to say I wanted to talk about what it feels like arriving back in Canada. I spent the week last week at 80 plus degrees Fahrenheit and came home on Wednesday evening to minus 20 with the wind chill Celsius. So quite a shock. It puts a different twist on the old refrain, home sweet home.
You probably thought they let you off in the Arctic.
It felt a lot like that. But no complaints. Our family had a great Christmas and holiday season together. And, well, the stock market has been climbing steadily of late. And it's a wonderful start to the new year. So let's get to investing, because that always warms my blood. This morning, I'd like to take a quick look at what happened in 2016 and consider the outlook for 2017 from the perspective of your investments. I have a lot of confidence right now based on how the year 2016 turned out for investors. The major market indices were up strongly in Canada, they were up in the United States and the rest of the world, all despite many of the negative headlines we had in 2016. I'm not sure, since we've been getting such nice returns lately, many forget that the first 2 months of the year in 2016, January and February, were really amongst the two worst months at the start of the year ever. We had some really rough, poor economic data in the United States in the first quarter of the year. There was Brexit, there was Trump, there was the problems in Italy. There were a lot of negative headlines that could have rocked the market and caused it to go down. But instead, the market went higher. So at the end of the year, investors in high-quality, dividend-paying stocks got paid handsomely with returns of more than 10% for 2016. And I highlight those high-quality dividend-paying stocks because those who listen to the program regularly will understand that's our favorite type of portfolio to own. They pay dividends in excess of 4%, which is much better than the 1.25% or 1.5% you might be getting in GICs, and much more tax efficient. I'm also excited about where we are right now. The state of the Canadian economy, the state of the U.S. economy, and the global economy all look very good right now. Just this week, we got some data from Canada that indicated that we've had a positive balance of payments for the first time since 2014. The Canadian dollar has been going up versus the U.S. dollar on the back of higher oil prices. And Of course, that's nice for all those snowbirds who have abandoned us to the cold and are going to the warmer climates down south. But we've also had very good job growth in the last few months in Canada. So lots of positive news. When we look south of the border, the U.S., the broad market index in the U.S., the Standard & Poor's 500, is about to go through an all-time record of 20,000 points. That's a real positive. It's really just when you look around the world, it's all good. Europe's been very resilient, Japan is doing better, and we don't have any real problems out of China. So excited about where we are right now. Finally, when I look at the outlook for 2017 for this portfolio of high-quality dividend-paying stocks, because once again, that's our favorite area to invest, it's also very positive. Stocks will move higher as economic growth improves. Now, I don't want to sound Pollyannish about it. Of course, there are risks. There are always risks, including what President-elect Donald Trump might do wrong and what interest rates might do to the economy and whether that could cause us to go back into recession. We're always on watch for those risks. But looking ahead, the good news certainly outweighs the bad, and a portfolio of high-quality stocks still looks to be a better bet than owning GICs or bonds. Now, I did mention interest rates. It'd be hard to think about 2017 without talking about interest rates going higher. In the United States, interest rates went up in December of 2015. Interest rates went up again this year in 2016 in December, and the Federal Reserve says that rates will likely go up 3 more times in the United States. Well, it's hard to imagine rates going up like that in the United States without rates in Canada at some point, with a lag no doubt, following. So 2017 would be a good time from a personal finance perspective for people to be reducing debt. There are many ways of reducing debt. I've talked about those recently on a show on television. I'd be glad to send anybody a summary of some of those ideas if they'd like to hear them. But 2017 will be a good year to have a plan in place for how you're going to reduce your personal debt so that when rates go higher, it will have less of an impact. So in summary, Marilyn, the return for high-quality dividend and payer investors in 2016 created a lot of confidence. Even as I speak today, the economies and stock markets in Canada, U.S., Europe, Japan, and China are good. The outlook for 2017 continues to be good for stocks versus bonds and GICs with little risk of economic recession. As a result of these factors, we're in the process of changing our mix of cash and guaranteed investments in stocks to a higher weighting in stocks, and Canadian and U.S. stocks in particular. We also, again, encourage people to reduce debt this year. Later this month, in the new Bank of Nova Scotia Presentation Centre in downtown Toronto in Scotia Plaza, I will be presenting our official outlook for 2017. Now, unfortunately, fortunately in some way, this event is entirely sold out, so I cannot invite any listeners this year. However, it's not fair to leave those who might be interested high and dry, so any listeners who would like me to forward a copy of my presentation, which includes my outlook for interest rates, the Canadian dollar, and stock markets in 2017, are free to call, and I'd be glad to send a copy along and have any discussion they'd like to have about that material later.
So when is that material going to be available?
Our presentation is on January 27th, so if people send me an email now or give me a call, I'll put the name on a list and send the information right after the presentation.
So I usually give out your phone number, and I don't even know if I have your email. What is your email?
It's Darren, D-A-R-R-E-N, .Farwell, F-A-R-W-E-L-L, at scotiawealth.com.
Okay, and are you going to work today?
I am going to work. Too cold to do anything outside, Marilyn, so I'll just go to the office.
That's a plus for listeners who want immediate gratification. 2017, We have someone who can show you the good things that are going to happen or explain the good things that are going to happen and perhaps give you a second opinion if you're interested or just chat with you about where you are in terms of what your money can do for you. Darren's phone number is 416 863 7501. That's 416 863 7501. The objective is to gain knowledge. Darren, I'll quote you, it's never too late to start a plan. So if you haven't got one, now's a chance to do that. If you have one and you want to make sure it's the right one and you want it tweaked a little bit, 416 863 7501. Just call Darren Farwell. He has a team of experts, and he's there for us because he's part of the From a Woman's Perspective team. Darren, thank you, and thank you for the whole perspective of what was last year and this year. I agree with you. 2017 is going to be a great year.
Great.
We'll
Thanks,
make
Marilyn.
it so. We'll make it so.